Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on SPY IWM and QQQ. So another day where we see the futures traders and pre-market and extended hours leading the price higher. So after a fairly weak close yesterday, we opened right at the high of yesterday. Saw a little bit of upside, also saw some profit taking with the Fed minutes when they came out, but the bulls bought the dip by the end of the day and did close above the middle Bollinger Band. Key support to me on the hourly time frame, if you look at it, you can see we had a pretty big shot to the upside Monday, and then we started trading sideways and consolidating, and the low of that sideways consolidation is the low of Tuesday, and that was 246.16. As long as that level holds, the bulls have higher lows on the hourly time frame, but if that level breaks, there's not a lot of support established because of the gap up Monday and the significant bull move. So that's an important level to be watching in terms of the bulls maintaining control. And we're looking up at resistance now of 247.57, followed by the all-time high of 248.91. So bulls still in control. Tech sector helped the market stay strong today as the financial sector saw weakness heading into those Fed minutes. But overall, higher lows still in play and no slowdown in sight. The weekly time frame regaining the exponential supports, staying in control long-term, higher lows and higher highs. Our new higher low on the weekly being established at 243.70. So IWM is still a lot weaker than SPY. And the bounce, you can see we had a big bear day yesterday, and we had a lower high and a lower low today with an upper wick of profit taking and a fairly weak close. So the gap will fill back down at 136.74 if we continue to see this weakness. We're rejecting from moving average resistance on this bounce attempt, and we are not seeing the kind of strength that we're seeing in QQQ and SPY, just like we saw the weakness here in IWM long before we saw it in QQQ and SPY. So it is very clear that IWM is the weakest market of the three, and as of right now, we are potentially looking for lower lows. We're looking to see if once this gap does fill, if we do fill this gap, if the 200-day moving average support can hold, which is going to be lining up at our recent low of 135.77. So the weekly time frame is back testing and rejecting from a key support, the middle Bollinger Band, which is now resistance, I should say a key previous support, and that resistance is 138.61. So any individual name on the weekly time frame that lost a key moving average support and is back testing and rejecting from them is staying in control of the bears short term, which is the case for IWM. QQQ is looking to see continuation, and we do have this lower high pattern to watch. So our lower high is 145.47. This is an indecision candlestick here after a 3-day bounce that favors the bears, and 144.96 is resistance of the top of this bounce. If we start to break the higher lows, we need to see the bears break 143.80 to start to pull back a bit. And again, from there, because the magnitude of this bounce is strong, we will be looking for a higher low to form on consolidation before the bulls make an attempt to break the lower high pattern and see a bullish MACD cross accompany that. So at this point, key middle Bollinger Band support has been back tested and held twice, but this candlestick of indecision does have us a bit cautious that we may be in for some short-term healthy consolidation after a 4-day bounce in the tech sector. Weekly time frame for the tech sector bouncing off the exponential support, new higher low established at 140.89. Bulls still in full control. No sign of slowing down, and at this point, we would have to break the low of last Thursday in order to show weakness. Keep in mind, the last couple Thursdays, we have seen a lot of bearish action. We had this Thursday, or this past Thursday, was that all-out dump, and then the Thursday before it was a red day, and then the Thursday before it was an all-out dump day. So just a pattern to be keeping an eye on. Not saying that's what's going to happen, but the past couple of Thursdays have been the most bearish days that we have seen in this market in the past month. So we'll see what tomorrow brings. We do have BABA earnings. Shouldn't have a significant impact on the market, but that is something to keep an eye on as well. And all in all, just watch SPY 246.16 on the shorter term time frames to see if the bulls can maintain their full control. If that level is lost, that will likely mean that we're seeing some tech sector consolidate as well. Thanks for tuning in. We'll check back in tomorrow. Have a great night.